Your market news now. Asian stocks lost ground, still hurting from China's slip into deflation, with investors particularly cautious ahead of a crucial U.S. inflation report that will likely influence the Federal Reserve's monetary policy path. Meanwhile, the announcement of a U.S. ban on investments in sensitive technologies in the world's second largest economy also weighed on sentiment. China is the first G20 economy to report a year-on-year decline in consumer prices since Japan's last negative headline CPI reading in August 2021. Back in Europe, corporate earnings continue to roll in and influence individual share price action. To give us perspective on the markets, we are joined by Patrick Matidi, who is the head of equities at Aluwani Capital. Patrick, thank you so much for your time. Your sense in terms of what's driving local and global markets, especially when you take in this news about China's deflation, as well as this U.S. ban on Chinese investments.
Good afternoon, and thanks for having me. I think on the local front, certainly China's economic progress, especially coming out of the hard lockdown that we saw Q4 last year, that is getting a lot of attention, largely because our market and our economy is closely linked to the prospects of China. So to the extent that we continue to see, disappointing economic news coming out of China, that has the impact of influencing sentiment, but also if you look at the commodity prices, we are seeing those actually coming down because the demand for our commodities is not quite there, largely driven from China. So we are seeing a lot of our commodity companies actually taking a bit of a strain if you look at their share price reactions. And so that is an area that the market continues to focus on in terms of the economics largely coming out of China as opposed to the US. But I think globally, though, I think the big question still stands with regards to inflation and interest rates. So hopefully, as you mentioned, the inflation numbers coming out of the US, hopefully will continue to point to a downward trend, given what we saw for the month of June. So hopefully that continues with the prospects for rate hikes actually also taking a back step. But I think there is still that risk that we could see maybe one last rate hike coming out of the US, as that economy continues to be very strong on other fronts, especially on the labor market and the housing market.
If you had to take a global overview, and perhaps let's even add in some of the local aspects here, what's the biggest challenge for the markets right now?
I think the biggest challenge is just geopolitics, right? So everything else, if you look at the economic variables, if you look at inflation, the market can price for that. But what we're struggling to price in and actually figure out is what we call the global macro events, that are spanned by geopolitics. So whether it's still Russia and Ukraine, whether it's the upcoming election in the US, whether it is the ban by the US of Chinese companies, those variables, unfortunately, you cannot predict, but they do have an impact in terms of sentiment and how the markets behave going forward.
So on Tuesday, just before we all went into the public holiday for Women's Day, we had Vodacom dropping a pre-public holiday bombshell, so to speak, saying here that the Competition Commission wants to block the deal with Vumatel and Dark Fiber. Is it too soon to be concerned right now, or are you waiting for it to play out, get to the competition tribunal, and perhaps appeal if need be?
Look, I think the initial response from the Competition Commission was a bit disappointing, but nevertheless, you are correct. I mean, it still has to go to the tribunal, who will have the last say. And typically, it's not always expected that the tribunal goes against the commission. But in this case, there is some hope that perhaps the tribunal could actually approve, but with certain conditions, that Vodacom will have to abide by for that deal to actually go through. So yes, there is still some prospects for a positive outcome, but the initial response clearly was not positive in terms of, I guess, sort of blocking the deal and not allowing the market to consolidate and actually, from a Vodacom point of view, in terms of growth, actually stunting their growth prospects.
You mentioned earlier that in terms of one of the big challenges for the market right now is geopolitics. And I want to take it a little bit further here and ask, when it comes to some of the cross currents that a lot of these companies can't seem to outrun, based on the earnings that you've seen right now, whether it's US earnings or even some of the local stuff that's been released, what are some of those cross currents that a lot of these companies can't outrun right now?
Yeah, I think locally, I mean, certainly the impact of load shedding has been very topical. So we have seen, especially in Q1 of this year, a lot of companies coming out and actually disclosing how much they have been spending on diesel, just to mitigate the impact of the unstable grid on their businesses. So that appears to be, I guess, sort of a passing by, with a lot more companies actually investing, in their own energy sustainability. So that, hopefully, this time next year will be a news of the past. But I think domestically and also globally, the impact of high interest rates on companies' earnings, I think that is still to come. So especially if we end up with a higher for longer interest rate environment, I think we'll see a lot of companies, especially those with challenged balance sheets, to the extent that debt on the balance sheet actually becomes a lot more expensive, that will undermine the earnings. And I think going forward, you could see a lot of earnings disappointment, largely on the back of high interest rates. And we've seen also in the banks, and especially domestically, the tough economy is actually having a negative impact on the consumer. So we are seeing a lot of banks increasing the provisions for bad debts, in anticipation of those consumers actually defaulting on their debts. So I think those are some of the issues that I play domestically, but I think globally also, I think the theme of high interest rates, which clearly has been an issue for a lot of the economists, I think that will start to play into some of the corporate earnings, especially businesses that are a bit weak, with no real pricing power, but also with a very sticky cost basis.
Patrick, thank you so much for your time. That is Patrick Matidi, who is the head of equities at Aluwane Capital. And just to mention, on Monday, we do have results coming out of ABSA. And then later on in the week, we have Standard Bank publishing their numbers as well. We're going to take a quick break. When we come back, we'll have more news for you. So stay tuned.